Getting married is one of the biggest commitments you can make. It's a beautiful journey filled with love and shared dreams. And part of building a strong future together means making smart financial decisions as a team. One of the first big financial choices you'll face as a married couple is how to file your taxes. It might sound boring, but trust me, this decision can have a big impact on your financial goals. Choosing between filing jointly or separately is a key part of your financial strategy as a couple. It's not a one-size-fits-all situation, and what works best for your friends or family might not be the right fit for you. That's why it's crucial to understand your options and make informed choices that align with your unique financial situation. We're going to break down these options in a way that's easy to understand, so you can approach tax season with confidence. Let's start by getting clear on what these filing statuses actually mean. Married filing jointly is exactly what it sounds like. You and your spouse team up and file one single tax return together. This means you're both responsible for the information on that return, including income, deductions, and any taxes owed. Now, with married filing separately, you're choosing to keep your tax situations separate, even though you're married. You and your spouse each file your own individual tax return. This means you only report your own income, deductions, and credits. You might be wondering, why would couples choose to file separately if they're married? Well, there are some specific situations where it might make more sense. For example, if one spouse has a lot of debt or is facing legal issues, filing separately can protect the other spouse's assets. Let's dive into the advantages and disadvantages of each filing status. Married filing jointly pros lower tax bracket often results in a lower tax bracket overall, which can mean paying less in taxes. More deductions and credits. You're eligible for more deductions and credits, like the student loan interest deduction and the earned income tax credit. Simpler and less paperwork. Filing jointly simplifies things. One return, one payment, if you owe. Cons: shared liability. Both spouses are responsible for all information and any debts owed on the return, even if only one spouse earned the income. Limited individual deductions. You might lose out on certain deductions that are only available when filing separately. Married filing separately. Pros: protects your finances. Shields one spouse's finances from the other's debts or legal issues. More control over individual deductions. You can maximize certain deductions based on your individual circumstances. Cons: higher tax bracket often leads to a higher tax bracket, potentially increasing your tax bill. Fewer deductions and credits. You miss out on some valuable tax breaks available to joint filers. More complicated filing separately involves more paperwork and can be confusing. So how do you decide which filing status is right for you? It all boils down to your individual circumstances. Consider these factors. Your incomes. If one spouse makes significantly more than the other, filing jointly often makes sense. Deductions and credits. Look at the deductions and credits you qualify for under both options. Debt and financial situation. Consider factors like student loans, medical expenses, and any potential financial risks. The best way to make the right choice is to run the numbers both ways, filing jointly and separately, and see which scenario gives you the biggest refund or results in the lowest tax liability. Remember, this is a team effort. Talk openly with your spouse about your financial situation and goals. And don't be afraid to seek guidance from a tax professional.